again, thank you so much for joining me for another Mortgage Accelerator video. Today we're going to be discussing what a commercial mortgage loan actually is and what purpose and role does it play in your business. So let's get started. All right, now let's talk about exactly how can we define a commercial mortgage loan? Well, in essence, guys, a commercial mortgage loan is a loan that is used to purchase, refinance, or develop real estate for commercial purposes. Now, where people normally get hung up is what does commercial purposes actually mean? Well, it boils down to two things. Number one is the loan for business purpose. If it's for business purpose, maybe opening up like a restaurant or something along those lines. Or if it's an investment purpose loan, meaning it's a purchase for a residential or commercial property where the borrower intends to just lease it up, get a tenant in there, and earn money on that rent. Ultimately, a commercial loan is a loan that someone cannot use to purchase a house that they're going to live in. In some instances, commercial lenders will allow the borrower to live in the property if it's maybe mixed use or something like that. However, in a majority of cases, the lenders do not want the borrower to live in it as their primary residence because that would fall under the TILA RESPA regulations set out. Now, why would someone get a commercial loan in the first place? Well, ultimately, just like we said, it would be because a borrower wants an investor or business focused underwriting guideline. So they can't get a typical residential loan because their purpose, the reason why they're getting a loan, doesn't quite fit those residential guidelines. So, just a few examples of why someone would get a commercial loan. Number one, it's a property type that doesn't fit the residential side. So, like it's a retail property or an assisted living or an Airbnb. These are things that your typical agency loan wouldn't be able to handle. Another reason might be because the loan has multiple purposes. For example, they need rehab, or maybe they want to do a ground up development, or maybe it's like a joint venture seeking a mezzanine lender to help them out. Another reason would be because they need an alternative underwrite. So the borrower needs an underwrite that doesn't look at income or taxes, or maybe their debt to income ratio is a little out of whack. So there's some sort of alternative document program that the borrower must have because they can't go the conventional route. So they need a commercial loan that opens the door to these private money lenders that have more relaxed underwriting guidelines. Now, let's just talk about a few examples of what a commercial mortgage loan might look like. Well, the first example would be a fix and flip loan. These are called hard money loans in general. It's a 12-month interest only loan for someone to buy an investment property, rehab it, and sell it. And it's a very short term loan because it's expected that the borrower would sell the property within just a few months, 3 to 6 to 12 months. Now, another one would be a bridge loan. So, in this case, the property might be a commercial property where it's unoccupiable at the moment. However, the borrower wants to buy an unoccupiable commercial property and make it occupiable. So they want to rehab it so that they can get a long term tenant in there, or maybe they want to occupy it with their own business. Another example might be a permanent loan. So this would be just like your typical agency loan, fixed for around 30 years, except it is underwriting strictly the debt service ratio of the property. So debt service meaning the ability for the property itself to debt service, but not the borrower's debt to income ratio to service the debt. So what they're looking for are more stabilized investments like a multifamily property with maybe 60, 70, 80% occupancy. Or maybe it'd be like a commercial property where the borrower is going to occupy the property themselves. So they want to see that it's not in a distressed state, but an occupiable state. And normally they want to see that the property is occupied. Well, I want to thank you so much again for joining me for another Mortgage Accelerator video. If you haven't already checked out our course, go ahead and scan this QR code or go to our website, newfinance.com, and check out our Mortgage Accelerator, where we teach you all about how to broker commercial mortgage loans. Now, because you did watch this video, you stuck around to the end, if you use the coupon code COMMERCIAL, you will get 75% off. And this is only going to the first 10 people that use this discount code. So jump on it if you're planning on taking the course. And then finally, go ahead, hit the subscribe button and the notification bell if you enjoyed this video and you want to hear a lot more about commercial mortgage loans. Thank you so much. We'll talk to you soon.